again today, guys, here with another video, and I want to show you guys some quick market structure on UJ, US Japanese Yen. Now for this particular pair, you actually want to, this pair moves really slow, so you don't want to use the 1 hour time frame for Japanese Yen, or you're going to be waiting for 5 million fucking years, okay? So for US dollar Japanese Yen, what you want to do is you want to actually wait and do, well, you want to use the 1 hour on US dollar Japanese Yen for your long-term structure. And for your active structure to take trades, you want to look at the 5 minute. You want to look at the 5 minute, but we're going to do the 1 hour right now. So the 1 hour structure is obvious, okay? So we have normally your chart probably looks like this. The first step I want you to do is clear your chart. So clear the grid chart, clear the grid on the background, clear the volume, everything. And the second thing I want you to do is zoom out. So right now, I'm zooming out. Zoom all the way out like I just did until your mouse can no longer zoom out. That's my secret to market structure, okay? Now, once you do that, you're gonna look and do market structure from right to left. And so I know left sometimes is more intuitive, but we use right to left. Sometimes I'll do it anyway, but we can clearly see that we have a high. Let me just draw this. You can clearly see that we have a high there, right? And we have a low. Then we have this previous high. And the reason why I'm not marking all this is because, actually no, I will. I'm just looking for structure that's relevant. So all that structure in between these lines that I'm drawing is irrelevant. We're looking for an outer structure. So we have structure that's obviously going up. We have higher highs and higher lows. We have more than 2 higher highs, and we have more than 2 lower highs. So what we're going to do is we're going to zoom in on the 5 minute, and then what we're going to do is we are actually going to observe here. So if we're trading, the first thing we want to do, like I said, is market structure, right? So we identified our market structure. We know that the trend is upward, so the trend is bullish. So we want to make money, what? Buying, probably, right? Okay, so how are we going to do that? So we noticed that, okay, price came into our current range, okay, which is this. We have this current high and this current low. Price came down, and it looks like it tapped into that gap right there. If you notice that gap I'm drawing, it tapped into this box, this fair value gap. It tapped into this area, and then broke structure. Okay, it broke structure, kept going up. So now, I like to go to the 5 minute to analyze this a little bit more, guys. And technically, price came down and filled the range already. So this is technically a low here. Okay? So what we want to do is now we want to go on an even lower time frame. I'm going to go on the 3 minute because this is still market structure. It may not be high time frame market structure, but it's still market structure that I like to look at because a lot of the trades that I take happen on these small time frames. So now we're going to look at the structure within. Okay, so we have, and what you can do, guys, a tip for structure is you can actually put the line chart and you can go ahead and just go like this. You can just go like current high, current low. I'm not marking that structure within. I'm just marking the outer structure that's holding that structure. Okay, the same thing that we talked about earlier. Okay, we had a low, high, a lower low, technically, or is that a double bottom? Hold on. Let me just draw this again because that's technically lower. There we go. So it's clearly up structure. Okay, so bullish structure on the 2 minute. So let's see. If we're probably going to be trading this range, okay? Now that we drew our structure, we're probably going to be trading between this range right here, between this current low and this current high. We're going to be trading in between this. And since we're buying, we're probably going to be buying what? Lower. So we're going to wait for price to what? Come down into an area that we're interested in taking a trade off of, which I will get into a minute. So now what we want to do right now is I want to just go back here. And I'm actually going to zoom back out. And the reason I said this we're going to take a trade here is because potentially, if we zoom back, what do we notice? Price already came down on the 1 hour. Price already came back and filled this. So why would price come back again? Yes, maybe it will go back down and fill some. It'll grab some liquidity before going back up. It could do that. It could do that. But all we need to know is from this point on, we're looking for buys. Okay, so if we look at some more clues here, we have another gap right here. So the market may reverse right here in the short term and may break that liquidity that we saw above earlier. So what I mean is the liquidity that we saw on the 3-minute chart. So this liquidity. And the fact that there's even liquidity here gives me a clue that Japan actually might break out. So I may be wrong. The fact that I see liquidity here gives me a bias that Japan or UJ may break below here before we buy up. And what I would do is I would mark that up as a green line, or I can put this liquidity line here, and we have some liquidity there. So if it breaks this, that's even confirming that more. And so Japan can honestly come down to this area, any of these areas, to be honest. So what we're going to do is I'm going to actually wait and see if price breaks that liquidity before going down. If it doesn't, if it continues going up, then what it's most likely to do is come down and tap into some other demand zone, which I'm already seeing right now. I see a demand zone right here. Sorry, I see a demand zone right here. I see a demand zone right here. And these are all just demand zones, guys. But yeah, I wanted to do this real quick so you guys can see what I'm doing. Yeah, so these are areas. So the market's either going to come down to these zones and react off of them. I'm gonna use my trading steps that I have in my journal and wait for a smart money reaction off of these zones. And since I'm on a lower time frame, I can't get hurt by taking 2 trades at once. So I'll take a trade up here, and if it breaks and catches my stop loss, that's fine. I'll take a trade down here, and if it breaks that, catches my stop loss, that's fine, because I'm on number 1. I'm on a lower time frame, so it's not going to affect me at all. Because if we take out the stop loss tool right here, look, just that demand zone is literally one pip stop loss. So I can literally afford to keep taking trades until I get down here. And the reason I'm doing that is because sometimes the market won't break liquidity for UJ and continue to go up, but we don't know what it's going to do. So the only thing we can do is wait for price to come to these areas and wait for an actual break of structure. And if we don't get that, then we already know that it's going to come down and break this liquidity. So that's how you know. So if you're thinking, well, how do I know? That's how you know. If it comes to these yellow boxes and it breaks the structure and reacts off of these boxes or these zones, if it reacts off of these zones aggressively going upwards, that probably means that the market's going to continue going up. But if we come down and break this liquidity after going through both of these zones, then it's probably going to go lower. Okay? So that's basically how I do, guys. So that's just a quick example. I hope you guys found this valuable. So for long-term structure, the 1 hour, 2 hour, the 4 hour works good, because that's how I found out that we may be breaking below. Because on the 1 hour, we have a fair value gap above here that we tap into cleanly, actually, right there. And the 1 hour, for the Japanese yen, remember, it moves slow. So you always want to start on the 5 minute and go and use the 1 hour for your long-term structure and the 4 hour for long-term structure. But on any other pair, structure would be the 30-minute time frame, the 1 hour time frame. The 30-minute time frame, the 1 hour time frame for my main structure, and then lower time frames for just keeping track of setups and everything. And yeah, guys, I hope that you got value from this video. If you have any questions, just message me on Instagram. I'll be here. Peace.